My name is Chris, bringing you this lovely cryptocurrency TA video from Westlake Village, California. It is a nice overcast day, and I am going to wait for a few people to get in the room. While I'm doing that, I am going to cover some crypto news. So, yes, the South Korean court just issued arrest warrants for Terra Luna founder Do Kwon. And I don't know how I feel about that. Now, the defunct stablecoin issuer for Terra Labs, according to the Financial Crime Unit of the Supreme Prosecutor's Office, the warrant included 5 additional individuals, states Bloomberg News. You can't trust them. Citing a text message from the prosecutor's office, they are charged with violating the Capital Markets Act, the report said. And this comes after the collapse of a $40 billion Terra ecosystem. However, Terra, the new Luna Classic's been flying to the moon, so I don't know what they're all complaining about there. What else I want to cover? Because the stock market is peeling back, we just had that hot CPI print, hotter than expected. Came out at 8.3%. Higher than the 8.1% expectation. And maybe Michael Burry, the guy from The Big Short, knew something ahead of time, right? I think we all did. We all knew inflation was not going to be transitory. And as they raise rates, well, it's bad for markets. So yes, Michael Burry, the guy who made a name for himself by basically making a ton of money during the housing market crash in 2008. He was featured in the movie The Big Short. He just sold all of his stocks, except for one, the GEO Group. It's a private prison in Florida. And yes, they are banking on a bunch of Democrats getting locked up. No hard feelings out there, guys. Just kidding. I'm going to jump into the TA portion of the video and just get right into it. We trade based off of trend, momentum, and volatility. And this is our momentum indicator. This is the stochastics, which when they cross down from a high level like this, momentum will be to the downside. And on the daily time frame here, we will be crossing down today with any kind of a closure below 21,465. We are well below that. So I do imagine we get to cross down today. And then volatility, this is called the BBWP. By the way, you can get a free link to set up TradingView just like this. That is kind of the first step if you want to learn TA, is set up a TradingView account and start tracking your favorite assets. This indicator measures volatility and it is direction neutral. When volatility is low, it tells us an explosive move is coming, because one thing is for sure in cryptocurrency land: if volatility is low, it is about to explode. So on the daily time frame, we already had that explosion of volatility. And that was actually, the last move was to the upside to the tune of about 20%. So from the low to the high, that was a 20% explosion there. Now, the last daily to the downside, as we had low volatility back here on August 12th, the explosion came to the downside as momentum crossed down. You can see here that we had 17% retracement. So what I would imagine, we might be in for some sideways, likely, as volatility has already exploded and needs to kind of reset here, or it could continue to the upside. So if this ticks up tomorrow, then and momentum crosses down, that might be an indicator that, hey, things are going to move. The momentum is going to remain to the downside. Pressure will be on as long as Bitcoin is closing below 21,465. So what else do I want to note here is this would be multiple drives of hidden bearish divergence. And that's the other way I trade, is by identifying bullish or bearish divergence. And we use the RSI to identify that. That got us this last move down to about 18.5. And that played out quite nicely. But basically, we had coming back point here, we had 1, 2, 3, 4 drives of hidden bearish divergence, which got us a move down to the 2618 fib. So that's the last piece of the puzzle, is the Fibonacci retracement tool to kind of get your targets of where to kind of let go of positions. And we had a target coming down here at about 18.5. So close enough is close enough. And I mean, that was pretty darn exact. So this would be our 5th drive of hidden bearish divergence. And this was right at the 618 fib where the bull traps come in. On a bullish retracement, a bounce up to the 618 fib, that is typically where your bull traps come in or where the bear traps will come in. And that is the big question right now, is are we going to get a bear trap on this current move to the downside? And given the fact that the stock market is melting down, interest rates are flying to the moon. The FOMC meeting is coming in next week. The rate should be in effect by the 23rd, another 75 basis points rate hike. That is not going to be good for the housing market or for the stock market. And in fact, we are sitting on the 618. Actually, we closed below it. If you use candle bodies, let's see. So that is a bearish retracement from the low to the high. And we came in right to the 618 fib, which is a little bit lower, below the 0.5, which is the 50% retracement. Typically says the market is going to move in, continue to the downside on a bearish retracement, vice versa to the upside. And we said yesterday, with any kind of a closure on a higher term time frame below 20,600, would very likely get us a move back to the bottom side of the range, which is coming in at 18,500. If that does break to the downside, the next target is going to be 16,500. And with a break of that, we're probably going to hit some of the lower targets we have been talking about over the past week or so. And what I want to bring this into as well is the 5-day time frame, which is one of the more powerful time frames. The higher the time frame, the more powerful the signal is going to be. And on the 5-day time frame, what we do have is a perfect setup for a volatility play. Volatility is expanding from a very low region here, getting above the 20 percentile, denoted right here. And that signal, okay, this move is in full force. And it actually expand off of this candle right here, this little tiny, call it down or a little doji candle. But the way this works is the average move off a volatility expansion off the 5-day time frame, and you can back test if you want. The average moves 42% to the downside. 42% is going to take you down to about, call it $12,000 off of that volatility expansion. So I would say this: as long as we are closing 5 days below 21,800, that move is in force. And additionally, we do have a drive of hidden bearish divergence. Actually, that's going to be 2 drives. 2 drives gives you a shot to the bottom side of the range, and perhaps the 618 fib coming in at 16,000. So I do believe we'll probably get a bounce off this wick, and we'll probably get a bounce off of the 16.5 region. And as long as we're closed 5 days below that 21,800, I do believe coming into the rate hike at the end of this week, and there will likely be some blood in the streets. And for some, that might be a good buying opportunity. For others, it might be a good shorting opportunity. Again, this isn't financial advice. It's not a financial, but just want to share with you guys what I'm looking at. Additionally, we're going to get the cross here. The infamous death cross where the green 55 exponential crosses the purple 200 to the downside. It's not going to be a perfect cross as price action is not anywhere close to the cross, that is typically a more perfect signal. So just be aware of that. And also note here, here's what a golden cross is. You can see, not on this chart. Let me pull it back to a chart with more price history. So the last golden cross on the 5-day time frame was right here at $5,000. And some are saying, hey, Bitcoin could get down to that level. If we just take a look off the last low to the high using Wix here, that gives us a target down to about 8,200. And to line it up further, if we use candle bodies from that low to the high, so you have a lot of confluence here around 10,000 to 12,000. And wow, that would put Bitcoin at negative 24,000. So I don't think that's happening. All right. So Bitcoin, that's on the higher term timeframes. Let's take a look at the shorter term timeframes to see if we can get a little bit of a bias on what Bitcoin's going to do today. And this is really the harbinger of death and despair here. It's the US dollar. As you can see off the CPI print yesterday, the dollar skyrocketed. As we're pulling back, as the dollar's coming down, Bitcoin has had a little bit of a time to bounce, have a little breathe. But if you see the dollar start to close back above this level at 110 on even I'd say a 4-hour time frame is probably a little more accurate. A 4-hour closure above there, very, very likely we're probably already going to get a move the top side of the range, as we did have 3 drives of hidden bullish divergence. And what is that? That's when price is making higher lows and RSI is making lower lows between this point here and these 3 points here. That gives you a shot to the top side of the range. And I would expect some more downside for Bitcoin if the dollar pop back up, along with NASDAQ pulling back, getting a little bit of a relief bounce here as well. And I just want to see if I can identify anything on the 4-hour here, and the clear divergence coming back, actually 3 drives, which gives you a shot to the bottom side of the range. And at a very minimum, I am expecting NASDAQ to come back down to the 200 on the weekly time frame, which is coming in right here at 11,500. If we start to lose 11.1 on a weekly time frame, I think the next stop is going to be about $10,000. And I think we're probably going to bleed it out even further from there. So NASDAQ's getting hurt. The dollar is rallying. The housing market, I mean, I just talked to a friend yesterday, got 6% on his mortgage, just closed on a property here last month. So with another 75 basis point rate hike, you can only imagine people paying 7% to buy a home right now. It's crazy. You can also see that the momentum has turned to the downside on the weekly time frame for NASDAQ. What about the S&P? Same thing. The Dow sings. So momentum is to the downside, and vice versa. The dollar, the momentum is to the upside. Let's touch on Ethereum, which, hey, merger, and you can see momentum has been to the upside. We'll cross down the low 1556, and that'll be crossing down from a high level. I imagine Ethereum's going to do whatever Bitcoin does. It's probably a buy the rumor, sell the news type of event. The daily has already crossed down, unlike Bitcoin. Bitcoin probably crosses down today. And I would suspect that Ethereum very likely retest this low at 1425. And if that breaks, I'll just give a quick little target on that using the fib. So if that breaks, next stop's at $1,200. That is for Ethereum, and that lines up with these previous highs right here. See how it all lines up just almost perfectly using the Fibonacci retracement tool. If there's some real juice on this move, yeah, definitely this area starts to break at about $1,000 for $450 Ethereum. And sorry to be the bearer of bad news. If you're long right now, I just put out a post on my Instagram about, hey, if you have a Coinbase account, why not just, again, it's not financial advice. I'm not a financial advisor, but if you can have money on a Coinbase account, you can sure have money in a Roth crypto IRA. You could get out of the market, wait for the market to bottom out, and then swoop up some Bitcoin, Ethereum, some altcoins on the market lows and really make a fortune for yourself, hopefully, and then grow it tax-free. That is what I seem to be talking to more and more people about, is the ability to grow your crypto tax-free. Why leave it on Coinbase when you're going to get nailed with tons of penalties, etc., etc. So I am going to leave that off for Ethereum. Again, Ethereum target 1425, next stop $1,200, and hope it holds there if you're bullish. Okay. We talked about Cardano, and yeah, any kind of a daily closure below here. I'm looking for 25 cents to get tagged. And what else? Luna C finally taking a dump here today. There's no reason this thing should be, rallying to the moon while Do Kwon's on the run from, the Korean police or whatever you want to call it. This thing has no business going up 200% in the past couple of weeks. So might be a good short opportunity. Let's see what the fib says. I'm willing to bet this thing does a full retrace, at least down. It's already less than a penny, but and look, what does it come right into that 618 fib, which is where your bear trap comes in. You usually get a bounce off that region anyways. What does the 4 hours say? 4 hours got the silver cross to the downside, already broke this level, and typically you're going to get a retest, a little bit of a bounce, and then continuation to the downside, especially if we start to lose this area at 0.251. Ethereum Classic, I think a lot of people are, given the merge, they're falling back on Ethereum Classic. Something that even the founder, Vitalik Buterin, had mentioned is that Ethereum Classic is still a great operating system, a great alternative to Ethereum. And that's why it rallied over 200% in the past, couple of months here, call it a month. From the lows to the high, it rallied quite a bit. And I do believe if Ethereum Classic starts to lose $30, it is not going to be pretty for this asset. What else? I think that's it for today, guys. I hope you enjoyed this live stream. I hope it came out okay. I'm good at live streams, but I wanted to give one a shot today. Thanks for tuning in and have yourself a blessed day. Take care.